Okay, now let's take a look at the second requirement on problem 19-2A. It says to determine the revised balance of the factory overhead account after making the entries in Part 1, which we've already done. Then determine whether there is any under or over applied overhead for the year. Prepare the adjusting entry to allocate the over or under applied overhead to cost of goods sold, assuming that the amount is not material. Okay, let's give that one a try. Now, above we have factory overhead of $27,000 to start with. Let's switch over here. I've slid up a little bit, and let's work on Part 2. Okay, so what we need to do now is come up with a revised factory overhead account. Okay. And the ending balance from the trial balance. Okay. Let's indent this, or do it this way. Just sort of make this a nice schedule with it looks a little pleasing to the eye. It was $27,000. Okay? And that was a debit balance, right? Okay. Then we had entries above where we applied some overhead. To jobs 402 and 404, right? Okay, if we slide up, perhaps we can see what those amounts were. And it was that $26,000. Well, that will credit the factory overhead account. So why don't we subtract the $26,000, right? So that would appear as a credit. You could do this in a T account fashion as well. In fact, that's a very good approach as well. Then we incurred some additional indirect materials. That goes into overhead. And the indirect materials is the 2100 that we see up top, so we'll reference that 2100. So essentially all we're doing is working through the balance to see if we can come up with the right amount. We also had, let me just copy this, some additional indirect labor, right? The 3,000 from above. That was a debit, so that will increase it. Okay, both of these are debits, right? So we'll just copy from there. And then from there we need to know, are we in a over-applied or under-applied position? And all we would really need to do is total it. So I will hit the sum button off of the Excel formula bar. It's an auto sum. Alright, I'll underline. And we wind up with a debit position. Now, if we're in a debit position, that means we have more in overhead than we applied, and that means we have under-applied overhead. Okay, so once we have that, let me slide up a little bit now. Once we have that, we know there's another entry we need to make. And that entry, let me copy that from there, make it look similar and consistent, would be if we have an under-applied amount, we need to take that to cost of goods sold. And an under-applied means we need to take it to cost of goods sold as a debit, equal to the 6,100. Okay, and the credit then would go to the factory overhead account. I'll just reference a cell up here, and then I will indent that and get that lined up right. And then our description on this one, using the formatter so that it lines up the right way, would be to remove the $6,100 under-applied overhead from the factory overhead account and add to cost of goods sold. I'll just abbreviate that a little bit, line it up, and that takes care of Part 2, everyone. Okay, now I've gone back to the problem. We're and I've gone up top where you can see the trial balance that we started to. Let me slide on down now, and we'll work on the requirement 3, which is to prepare a revised trial balance. Okay, well, rather than me doing that in front of you, which will take some time, I'm going to use a shortcut here. Now, what you need to do is start off with these balances, and then you need to consider the journal entries we made in Part 1, as well as the work we did to justify what's in the factory overhead account in Part 2. And from there, we're preparing a revised trial balance. Now, there's nothing new in terms of managerial accounting here. This is merely working through what we've already learned in principles of accounting. Okay, so there's the journal entries in Part 2 in front of you. The journal entries are up top. Instead, what I'm going to do is just provide you with the solutions, and let's look at it for a minute. Okay, so here we have Part 3, the trial balance, and most of these numbers are going to be exactly the same. However, look at the asterisks here, and those are the significant items to consider. Raw materials inventory was adjusted by journal entries, right? If I slide back up here, we had a couple credits. We had a credit to raw material inventory. So any of these counts are going to be affected. The goods in process inventory, the factory overhead, and hopefully you'll realize that that amount will be 0 because we computed an under-applied amount and then we credited, bringing it down to 0. All right, let me slide back up. Okay, so all of these remain the same except the raw materials inventory would be affected by the amounts of 402 and 404 and any indirect materials. Now again, we're using the book's approach, which says indirect materials are considered a part of raw materials inventory, and they're not kept in a separate indirect materials account or a separate supplies account. And then in the goods in process inventory, of course, we had a number of entries where we transferred the cost of the materials and the labor and the overhead at 200%. You see the relationships here of 200% of direct labor into the goods in process. So that's how we come up with the $51,200. And then the rest all reflects any changes if there were any, and cost of goods sold certainly is reflected. It reflects the 105 plus the 6,100 of the under-applied overhead that we needed to take to it. Okay, everyone, so that takes care of Part 3 of this problem. Okay, let me slide back down again, and now let's take a look at Requirement 4, which says, once we've prepared a revised trial balance, let's go ahead and prepare an income statement for 2005 and a balance sheet as of the end of the year. And again, there's nothing new in terms of managerial accounting here. If we have a trial balance, whether or not we're a manufacturing company or a merchandising company or a pure service company, we should be able to very easily move from a trial balance to an income statement. So if I slide up, the income statement is simply, I'll slide one more, we'll lose the top there. The sales less the cost of goods sold coming right from the trial balance, right, which generates a gross profit, and then subtract off those accounts that make up the operating expenses. Okay, and in our case, operating expenses really are just lumped in one account. In the real world, that may be a number of accounts, may even be accounts within cost centers or departments, and that'll generate net income. And then we prepare a balance sheet at that point, taking it from the trial balance. And here, really, there's, again, nothing new in terms of managerial accounting or cost accounting. You simply need to know which accounts go on which financial statement. And once you have that, you're able to complete Part 4.